Hi, everybody. U.S. markets closed, solemn holiday here in the U.S., Memorial Day. There is some flow from what happened in Europe, and I just want to give people a prep ahead before the U.S. comes back to the markets tomorrow. I'm Dale Pinkert with TradeGATEHub.com. Check us out, and we're powered by TradeView Markets, a broker where you can trade every instrument in your imagination with good leverage and very competitive spreads. So let's talk about what's going on here today. The euro's drifting higher, but the feature is really getting kind of a pop out of US dollar yen today, which would imply that they're starting to think about the Fed in the days ahead. Potentially, we could get one more high in US dollar yen. And a failing rally in the dollar. So I wouldn't be short the yen. And I know I talked about that after this bounce that we get back in the yen, that we could have something similar happen in yields, because look at these charts. They're pretty familiar. They're very similar. So my mouth's not working that good. So we could have a pop in the 10-year. Actually, the longer dated paper might have 122 in it, maybe another day or so. But as I teach, there is some divergence here in the bonds, and a lot of people are starting to get all bulled up about the bonds. It's my contention that there still could be one more shot down, that this could be a 4, even if it has a little more left to the upside, and that we're going to spike lower for a 5. We're going to be talking about QT with the Fed. So all the strength that we have had in most of the markets, a bounce back, has been without the Fed in mind and having a window to squeeze shorts. So I think that's what happened in the S&Ps. I talked about that in the S&Ps, that if we took out 4,100, that there could be a short squeeze. And I think the shorts are under pretty good pressure here in the S&Ps. We took out 4,100 by plenty. That was this line that it failed from last time to make the new low. I actually, when I was on Monday, said I wouldn't buy it here. I'd buy a pullback to 38.5. Didn't quite get to 38.5. Went to 38.76 before the squeeze happened. I think there's a chance before the squeeze completes that we're at 4,300. So if I'm right about the yen and we have another rally to the upside in the yen, we should be getting close to pullback time in the euro. Okay, so I know some people that think this was just one big bear market rally. There's a chance for new lows, but the grinding and persistent nature of this advance and clearing a lot of moving averages at the same time, getting approaching the 50 right here, that might turn it back. So I did the fibs for you guys. And if you missed the first rally out of here, which I caught with the gold market, look for your fib retracements to occur. My favorite areas are in the 105-ish area, 61.8 looks pretty good. If we could get a pullback there in the days ahead, I would attempt longs, and I'll fine-tune stops, but for sure, you don't want to be long under the 103.5 level. That opens the door to, at the minimum, a stop hunt to 102.5, maybe 101.40. So I would try the long side on a pullback. Similar situation in cable. Cable looks like we may have had this bottom here, had a little divergence here as well. I'd do your fibs from this low to where we are about now, and then look for 61.8 back there. Canada, pretty weak today with a weak dollar, strong crude. I wouldn't play this counter trend because it's been one of the weakest ones, but any rallies, I think, back towards 740, back towards this prior low, especially where these two moving averages have confluence up around 28 would be a sell to me. EG, still bullish long term on EG. We got to a very major level that turned it back at this 86 level. Let me pull up a weekly, and you could look all the way left to see how pivotal that area is. Closes over 86, measure up to 90. It's 400 pip formation. Talked about the pullback. Euro was making new lows here. While EG wasn't, Euro was making new lows here, while EG wasn't. So the Euro pound actually led this dollar top, if it is going to be a top, but there are some people still thinking that Dixie could make a move over the 105 level to 106. I think it's going to be pretty interesting to see what it does at the 103.10, 103.50 level, which was where it broke down at, right here, 102.5. So it's only 100 higher. All last week it respected this breakout. And if we get above 102.35, there'd be more room for a failing rally, and maybe the new high does develop with the Fed doing QT. I wouldn't be short the dollar down here. I will, just like the euro, look to fade dollar strength at the 61.8 level, could be up around 103.5. If you want to trade the reaction, just use some type of money stop. If you want to be short euro here, my trade is to buy it because I believe there'll be a pullback. All right. So in the old days, I would say to myself, well, Dale, if you think you could buy it down at 105.60, why don't you short it? Make the money down on the way down. Because I don't know if it's going to go down. I know what I'll do if it does go down, but this is just my, preferred narrative and scenario in the market. Market doesn't care what my preferred narrative is, but that's not the trade. I'm really not a dollar bull anymore, and have to give this rally the benefit of the doubt that it was an important low. Just taking a look at the weekly, next week's off number is 105.50. Well, okay, there you go. 105.50, which is right around the 50% level here. So you have confluence with a 2-week off number and a 50% fib. That gives me some more confidence to try it there. And then if we close by next Friday under 105.50, it would negate the 2-week reversal to the upside temporarily. So a big number here in the euro at 105.50. My preferred long, even more so than euro, would be to buy Aussie if I had a chance under the big round number of 70, maybe 69.5, looking at that. And then if we get the rally in the dollar, gold's acting pretty good today. It's up 7. I was looking for some type of pullback that would give us a chance for re-entries down here around 1825. So we'll see if it happens. If we're going to continue up, this is the next big level, is this 1890 level, was a breakdown. And, once we started closing under it, be a natural place for it to test. And then the big line is this downtrend line from the high at 2070. And that would break a downtrend up at 1920, 1930, which will set up the rally to new all-time highs, which is what I'm looking for. So if I have an opportunity to buy this market 1825 or so, and that's why I said take half last week, just in case we don't get the pullback. But if we do, you've booked profits, and you can you're going to have less risk on a re-entry at this 1820 level. Similar situation in the silver, $21.30, $21. I'm looking to buy a pullback here. Next move could take us up to the line that we broke down out of 23.5, 24. That's going to be the next big area. This is going to be a pretty big area, 23.5 to 24. That's where we had the breakdown. I'm a buyer on weakness. One other chart that I wanted to show you, because everyone's real bulled up. And in fact, Mike showed it during the end of Um, our broadcast together on Tuesdays at 11 a.m., which I'll be on with Mike tomorrow at 11 a.m. And he was showing this near the end. And I said, you know, this looks like it's shaping up to be a third drive to a top. Mike and some members shorted it up here, made some money. It tried to make another high here. It wasn't quite a reversal week in Nat Gas, but it's not going to take much to turn down. We need a Friday close under 27.75. But, you know, sometimes when you get a market really loaded up like it is here, and you have really classic divergence, look at the difference in the RSI reading. So, wow, what a lot of momentum it had here for drive one, right? We had a pullback, and then drive two didn't have as much momentum, but not ideal because it was, you know, still over 70. And this high that we had last week was under 70. So you could see the downtrend in the RSI with successive higher highs. So possibility, we see 24. And, you know, we get through 24, why not 20? So everyone's pretty bulled up about this. 24 looks pretty viable to hold the uptrend. And I'll wrap it with that and hope that everyone has a, in the US that's watching this, has a good Memorial Day. You may not like the politics in the country or the cause, but you got to be for the troops, because I was in a dorm room during Vietnam, was very happy to have a high lottery number. So I'm still awed by the courage that our soldiers have and had. And watch a World War II movie today and ask yourself, could you have been in their shoes? And to think about their families that had to go on in life without them. I salute them all. So everyone have a great day here in the States. Have a nice Memorial Day. And Mike and I and the team will be back in full action. Today would be a good day to open a demo account at TradeView and get used to their platforms and investigate it. Doesn't cost you anything to transfer either. So remember, especially on a day like this, don't just count your pips, count your blessings. And Mike and I will be with you tomorrow, 11 a.m. EST. Good hunting and adios.